Hi, welcome back. Today we're going over the power of Enwalk. Like I say in the beginning of all my videos, I do hope you have a pen and paper next to you. If you've never used Enwalk before, you're gonna see how powerful it is today in this video. And you're gonna use it for the rest of your lives. It's one of the strongest methods of adding context to your trades. And honestly, just you can trade purely off the Enwalk itself. Honestly. So let's get to it. So what is an Enwalk? Oh, it's a new week opening up. How to find it. So, at the beginning of the week, you're gonna have a candle. At the close of the prior week, you're also gonna have a candle. It's very common, not all the time, that there's gonna be a jump in price. So to find your Enwalk, using the bodies of the candles, you want to put a horizontal line at the close of last week and the open of the current week. Also, I also recommend putting a fib on it with the 50% level marked out from the close to the open. 50% of this level is your CE of Enwalk. How to use it. Here's two ideas. What the heck? Price can attract or repel from the Enwalk. And the Enwalk can be used as support and resistance. So when we see price open with the Enwalk, mostly going to see an attraction. My bad, a repel. I'm sorry, a repel, and then an attraction to the Enwalk. Repel and attract. And then around this scenario, it can be used as support and resistance. What you mostly want to see is a failure to CE. Put it over here. A failure to CE. Basically, we don't want to see price crash to the Enwalk like this if we are in a buy scenario, because this could mean price invalidated the Enwalk, and then it retests it, support and resistance, and then continues. So the CE level is very, very important. So why does it work? So this is my opinion right here, because of emotions. So I can back up this claim by looking at a chart illustrating a collective trauma response. So this comes from the ICTG, the Institute for Collective Trauma and Growth. You can see that it's eerily similar to a buy scenario in the market, right? So looking at this in trading terms, your sudden impact can be seen as your Enwalk, heroic phase as your repulsion, disillusionment phase as your attraction. From here, in this illustration, repels and attracts back to the sudden impact. And then it uses it as a support and resistance in this scenario as a buy, and continues. We can actually see something just like that this week on gold. Sorry, this is for later over here. So, beginning of the week, the Enwalk, sudden impact, right? The repulsion, the heroic phase. The attraction back to the sudden impact, your disillusionment phase. Very clear and simple, and visible, right? Beautiful MMXM. But around the Enwalk, we see the initial test right here. So right now in this scenario that it was in, it was bearish. But if you traded off this Enwalk test, you would have made around just about 500 pips. This was tradable because we see an order block right here. And then we see a bearish order block right here. Here's the thing. The PD arrays plus Enwalk equals strong. When you have them lined up together like this, it's going to be a strong level. So this is just an order block to an order block scenario. Would have made around 500 pips just using the Enwalk. So going on from there, we're in a bearish scenario, right? price crashed to the Enwalk. And this crashed to the Enwalk. You see a beautiful FEG right there lined up with the Enwalk. So zooming in, you see two sets of failure to CE. This was a picture perfect trade on the 1 hour. So we see one set, the CE at the FEG. See how the bodies right here, the candles, they're not going through the CE of the FEG. Here's one. The other one is CE of the Enwalk. These same candles. If I take off this FEG real quick, they went through just a bit the CE, but it's mostly rejecting, right? And also they didn't go through the opening of the week, the upper level of the Enwalk. This Enwalk is being tested perfectly on the 1 hour. As a perfect trade. Here, just to give a little bit more context. If you saw my MMXM course, you would see there's an MMXM going on here. So your order block, that's your IRL, right? Structural, IRLO, ERL, FEG, your IRL, and this low right here, ERL. Very, very simple. It's easier to see it, how the market moves in MMXM terms, isn't it? But most people don't trade off the 1 hour, right? So let's see what happened on the 15-minute. We're looking at this piece of price action, right? So I'm going to keep my higher time frame FEG. Because you can refine it right here. And it looks nice. But I do like to keep my higher time frame. And my personal trading style, of course. So, with the Enwalk, what do we see here? We see a repel. Then we see an attraction. Now, we're expecting a repel from the Enwalk, right? You can't forget about the two blue lines right here that we put in the beginning of the video. Because yeah, there's a lot of context going on here, right? But all this context, powerful, strong context, only gives you confidence in your trades. So you can up your lot sizes and make a little bit more money. So if you got this far in the video, I'm gonna give you a little treat and show you my IFEG model. So basically, when you see price come into your POI, your FEG, or your order block, or your ERL, to be honest with you, there's mostly going to be an FEG and an expansion of your POI. What we want to see in this bear scenario, because this FEG is in our bias, right? We want to sell off. We want to see this FEG that was here at first be crashed through. So now this is your IFEG. At this IFEG, we want to see a failure to CE. So of course, it goes with a grain of salt. It's not always picture perfect, but we want to mostly see the CE level, this mid level, be used to continue the bearish scenario. So let's see this model in price. So this is my IVG in bias, right? This main box. And the expansion up to the FEG, there's an FEG right here. And I want this one to be crashed through, which it did right here. Okay, I'm gonna turn to this, it's a little bit more visible to see, and run it through. So, price crashed through the FEG, made an FEG, inside of the FEG, plus the Enwalk. A lot of context, right? So, ended up making a failed high. It did not make a new high. Of course, we know failed high means bulls losing power. So now, after it comes back down into the IVG, we can expect bearish scenarios to play out. This is the triggering point. Zoom in just a little bit. We can also see another 2 sets of failure to CE. This is a fractal price. So on the 15-minute, this candle right here, after the failed high and after the validation of the IFEG, it failed to go through the CE of the Enwalk. See that line right here. You can also see how it failed the CE of the main FEG, which is this line right here. So, very strong context, right? Rejects it off. And here, in hindsight, of course, beautiful place to enter. Target the ERL. And in this scenario, I recommend to put the stop loss above the failed high. So you would have made around 280 pips. And that's just by using the Enwalk. There's actually a little bit more context. So for my gold block enjoyers, I'll put on my 81 PO3 and I have a keen eye. You can see already how the extension was used right here at this exact candle. Isn't that funny? You can also see how the extension lines up with the Enwalk CE. CE and Enwalk right here is the extension. Right there, look. It's very nice right here. Then it sold off to the EQ. To the EQ of the gold block range. We targeted the ERL. I think that was 280 pips, right? So to the EQ of the gold block, that's almost 400 pips. But that's for my gold block traders. Well, I believe that's everything I need to show today for the Enwalk topic. Hope you guys learned something today, and hope you have a good day.